$5,000 down payment grant from Rocket Mortgage sounds like free money, until you refinance and discover it disappears. That's because Rocket's assistance comes with a hidden clawback clause, and it's in your closing documents right now, buried on HUD-1 Line 1201. By the end of this video, you'll know exactly where to find it, what it costs you, and whether you're locked into a mortgage you can't escape without losing thousands. First, let's be clear on what you think you're getting. Rocket advertises down payment assistance as a gift that reduces your out-of-pocket cost. It sounds like free help, but research into CFPB enforcement actions and actual Rocket HUD-1 sample documents reveals the reality. Down payment assistance is a conditional loan subsidy, not a gift. The condition is this: you must keep the mortgage for 3 years. If you refinance before that window closes, you repay the full grant amount dollar for dollar. Here's the concrete impact. Imagine you're a first-time buyer, household income $75,000. You buy a $280,000 home with 3% down, that's $8,400 out of pocket. Rocket offers a $5,000 down payment grant. You now put down 78% instead of 3%. The closing documents cross your desk. You don't read line 1201 closely, or if you do, the language is technical. Borrower acknowledges receipt of down payment assistance in the amount of $5,000 and agrees to repay said amount in full if mortgage is refinanced, sold, or transferred within 36 months from loan closing date. It's there. You sign, you move in. 2 years later, mortgage rates drop from 8% to 8%. You'd save roughly $150 per month by refinancing. That's $1,800 a year or $9,000 over 5 years. You call Rocket. They tell you refinance yes, but you'll forfeit the $5,000 grant. Additionally, refinance closing costs run $2,500 to $5,000 on a $266,000 new loan. 3% of the loan amount is standard. So your true cost to access those savings is $7,500 to $10,000 upfront. That $150 a month savings doesn't make sense anymore. You stay in the 8% mortgage, you lose $9,000 in potential savings over 5 years because of a clause you missed or didn't fully understand. But here's where it gets worse. This isn't just Rocket. Data from CFPB complaint files and HUD guidance on down payment assistance programs shows that the 3-year recapture window is standard across most conventional loans sold to Fannie Mae and Freddie Mac. Chase, Wells Fargo, US Bank, and smaller lenders often use the same structure. It's not a Rocket-specific gotcha, it's an industry standard. But Rocket, as the largest online mortgage lender, originates the highest volume, so the absolute number of borrowers affected is largest there. The TRID rule, Regulation Z, 12 CFR 1026/19, requires lenders to disclose prepayment penalties and similar recapture clauses on the closing disclosure form, which you receive 3 business days before closing. Technically, Rocket is compliant. The clawback is disclosed, but compliance and clarity are 2 different things. Most borrowers don't understand that a gift with conditions is a contingent liability, not a true gift. The delta between what borrowers think they're getting and what they're actually getting is stark. $5,000 gift versus $5,000 contingent loan that you forfeit if refinance circumstances change. So what should you do? First, before accepting any down payment assistance, request the specific language on line 1201 or the equivalent disclosure on the closing disclosure. Ask explicitly, if rates drop and I want to refinance, will I lose this grant? Get the answer in writing. Second, model the scenario. Use an online refinance calculator and estimate your savings if rates drop 0, 5%, 1%, or 5%. Then subtract the clawback amount and refinance closing costs. If the math shows net savings after all friction, the grant may be worth taking. If savings are marginal, say $2,000 over 5 years, the grant lock-in risk may outweigh the benefit. Third, ask if your lender offers grants without a clawback window or with a shorter window. Some lenders are moving to 2-year windows or no clawback at all for borrowers in specific income bands. It's not common, but it exists. Finally, read your actual closing documents. Line 1201 on the HUD-1 or the equivalent section on the closing disclosure is your guardrail. If you can't understand it, ask your loan officer to explain it in plain English before you sign. The bottom line, a $5,000 grant can feel like $10,000 in lost savings if rates move and you're locked into a mortgage you can't refinance without a penalty. First-time buyers often optimize for the down payment, not the long-term rate flexibility. That's a mistake when rates are volatile and refinance windows are open. If this changes how you evaluate down payment assistance, hit subscribe. I'm breaking down the 7 hidden fees in standard mortgage closing costs next week. Ring the bell so you don't miss it. What's the biggest takeaway for you? Are you currently considering a down payment grant? Drop it in the comments. Smart buyers ask the right questions, keep asking.